Did you know just 5 to 7 companies have the power to move India's entire stock market by hundreds of points in a single day? When the Sensex falls or Nifty hits a record high, it's not because of thousands of stocks. It's because giants like Reliance, HDFC Bank, Infosys and Airtel move. According to Reuters, Indian markets recently rallied only because IT and banking heavyweights gained, while losses in Reliance and HDFC Bank dragged the market on weekdays. So the real question is, who are these key players? Why do they matter so much? And how can understanding them change the way you see the stock market forever? In this video, we'll break down India's real market movers, backed by real data, real news, and real examples.
The NSE National Stock Exchange is gearing up for a possible IPO filing by March 2026, a major step for India's capital markets. This could expand investor access and liquidity. At the same time, market benchmarks like Nifty 50 and Sensex are seeing both highs and volatility, influenced by local earnings and global macro forces. One of the most influential stocks in India is Reliance Industries Limited, a conglomerate spanning energy, telecom, geo, and retail. It repeatedly headlines top market cap growth stories within the stock market. Even amid fluctuations, RIL remains one of the rank 1 drivers of benchmark performance. Reliance is India's largest company by market capitalization and has businesses in oil and gas, retail, telecom, geo, digital services. Multiple news reports have shown that whenever Reliance moves up or down, Sensex and Nifty feel the impact immediately. Reuters and Money Control have repeatedly highlighted that Reliance alone can move the index by hundreds of points on heavy trading days. This is why Reliance is often called the backbone of the Indian stock market. The second most powerful sector in the Indian stock market is banking. Private banks like HDFC Bank, ICICI Bank, and public sector giants like State Bank of India, SBI, together these banks carry massive weight in the Nifty 50 and Sensex. According to Economic Times and Business Today, banking stocks drive long-term market trends, react strongly to RBI decisions, reflect the overall economic health of India. Whenever banking stocks rally, the market usually follows. Banking stocks are huge drivers in India's indices. HDFC Bank, consistently among the biggest gainers. State Bank of India, largest public bank by assets and value. ICICI Bank, another heavyweight with strong market cap. Banks often steer short-term market sentiment and long-term index direction. India's IT sector is another major market mover. Companies like Tata Consultancy Services, TCS, and Infosys represent India's global technology strength. Reuters and Economic Times reports show that IT stocks react sharply to US tech spending, dollar movement, global recession fears. Because IT stocks have high foreign investor interest, their movement often signals global confidence in Indian markets. Information technology giants like Tata Consultancy Services, TCS, and Infosys are major Nifty 50 constituents. In late 2025, their market caps saw significant gains reflecting strong sector performance. These companies not only influence Indian market indices but also reflect global tech demand trends. Another important key player is Bharti Airtel. With strong growth in 5G services, average revenue per user (ARPU), and digital expansion, Airtel has become one of the most influential stocks in recent years. Money Control and Business Standard reports show that Airtel's rally has significantly boosted index performance during multiple market phases. Bharti Airtel remains one of India's top stocks by market cap. In recent times, its gains helped push top 10 company valuation increases, showing telecom's renewed growth power. Market reports show Infosys and Reliance leading the uptrend for Sensex above 84,000, with IT stocks shining. This proves that even day-to-day market moves often hinge on a few key players. Beyond the biggest names, mid-caps and sector-specific stocks are also important. Recent market news highlighted stocks like Tech Mahindra, Maruti Suzuki, L&T Technology Services, and Zydus Life as active movers based on earnings and sector trends. This shows diversification. Auto, tech, and healthcare all contributing to market breadth. Global events affect Indian markets too. Renewed tariff concerns from the US dented sentiment earlier this year, dragging IT and pharma stocks. At the same time, positive investor sentiment can fuel rebounds in large caps, proving markets are sensitively linked to global risk factors. So what should investors watch? Heavyweights like Reliance, HDFC Bank, SBI, Airtel, TCS, Infosys, ICICI Bank often shape the market story. Sector news, IT earnings, telecom growth, banking fundamentals ripple through indices. Big index moves rarely happen without one or more of these names leading the charge. Global events directly affect Indian stocks. For example, US interest rate decisions impact IT stocks. Crude oil prices impact Reliance. Global banking stress affects Indian banks. Reuters has consistently reported that Indian markets are deeply linked with global cues. If you understand these key players, you understand market direction. You reduce emotional trading. You read news with clarity.
Stay tuned for more updates.